All right, let's talk Virtu Financial. Their Q2 2025 earnings call was a real head-turner. I mean, on one side, you've got these incredible record-breaking numbers, and on the other, a huge headline-grabbing leadership change. So what does this all mean for Virtu and, of course, for investors? Let's dive in and unpack it.
And this really gets to the heart of it, right? It's like a tale of two announcements. You've got the numbers, and believe me, they were blockbusters, completely blew past what anyone was expecting. But then you have the news, the shocker that founder and CEO Douglas Cifu is retiring. It's this exact tension, this incredible performance versus this big question mark on strategy. That's exactly what we're going to dig into.
Okay, first things first, let's talk results. Because, wow, they were just undeniably powerful and really set the stage for everything else. Okay, check this out. The big story here isn't just that they beat expectations, it's how much they beat them by. Virtu came in with a non-GAAP EPS of $1.53. The street was expecting something around $1.36. So yeah, they absolutely crushed it. That's a 12.5% beat. And it was powered by a staggering 44% jump in revenue compared to last year. This wasn't just, a good quarter. This was a dominant performance, plain and simple. And this number, 65%, this is what really tells you how efficient this company is. They hit a record adjusted EBITDA margin. Now, why does that matter? Well, for an investor, this is absolutely crucial. It's a sign of incredible operating leverage. Think of it like this. For every extra dollar of trading that comes in the door, a huge chunk of it goes straight to the bottom line as profit. They are just masters at controlling costs.
And here's the kicker. This wasn't just their old-school business firing on all cylinders. Management made it really clear that their newer bets, we're talking ETFs, digital assets, that kind of stuff, are seriously paying off. They brought in an all-time high of $1.3 million per day. I mean, let that sink in. That's a full 15% of their daily trading income now. So these aren't just little side projects anymore. They're becoming major profit engines.
All right, so now we get to the big pivot in the call. Right in the middle of all this financial celebration, they drop a bombshell, a total changing of the guard right at the very top. So yeah, after 18 years, the founder, Douglas Cifu, is stepping down. And his legacy is huge. I mean, he started this thing back in '08 and then basically built the Virtu we know today by pulling off these two massive company-defining acquisitions of KCG and ITG. It really is the end of an era, no question about it. So, the big question, right? Who's taking the reins? Well, Cifu himself couldn't have given a stronger endorsement for his successor. He called Aaron Simons, the firm's CTO, the smartest guy at Virtu. Think about that. And Simons isn't some outsider. He's been there since day one, since 2008. Cifu's praise just makes it crystal clear. This is a deeply respected leader taking over from within. Promoting your chief technology officer to chief executive officer, that sends a very powerful signal, doesn't it? This move is basically Virtu screaming from the rooftops that they are doubling down on technology as the absolute heart of their strategy. It's not a change in culture, it's an acceleration of that culture. You're getting all that deep company knowledge, but now with a super fresh, tech-first perspective leading the charge. So, where's this new tech-first future actually headed? Well, management spent a good chunk of the call laying out exactly what they think will power the next chapter of growth for Virtu. And these are the three big areas they kept coming back to. You could hear the excitement in their voice. Their ETF block business, options market making, and this is the big one, digital assets. They pointed to all three as just performing exceptionally well, thanks to all the market volatility and a huge surge in client demand. This is the trifecta they're really betting on. When it came to digital assets, man, they were bullish, like really bullish. They pointed to the new stablecoin laws as a huge step forward, basically giving them clear rules of the road. But the most interesting part was how they talked about tokenization, creating digital versions of US stocks for clients overseas. They don't see this as fighting for a bigger slice of the same old pie. No, in their words, this is a pie-growing exercise. They're making the whole market bigger. And that whole idea of global access and making the pie bigger, well, it leads to a really fascinating question they tackled on the call. What's the future of 24/7 stock trading? And what's wild is that Virtu was actually one of the pioneers in this space years ago. But they were also really honest about where things stand right now. They basically said, look, 99.9% of this overnight trading stuff, it's all retail investors. For the big money, the institutions, to really jump in, a few things need to happen.
You need way more liquidity, you need clear rules on how things are done, and you need a solid reason for them to be there, like hedging risk overnight. But here's the key. Virtu sees this as a when, not an if, and a massive opportunity when it finally happens.
All right, so we've looked at the killer results, the big leadership shakeup, and the future growth story. Now let's do what we do here. Synthesize all of that into an actual, actionable thesis for what happens next. So here's the setup, the classic bull versus bear case. The bull argument is pretty simple, right? You've got a new, super tech-savvy CEO, you've got these powerful growth engines like crypto and ETFs, and you know they can turn revenue into profit like nobody's business. The bear case, though, it's all about the fact that even after this monster quarter, the stock actually went down 3 or 4%. Kind of weird, right? And that seems to be tied to some comments they made about expenses and just general weakness in the sector.
So that brings us to our first trade idea, the crypto leveraged tech continuity play. The whole thesis here is simple. You're betting that the new CEO, Aaron Simons, is going to hit the gas on the company's tech advantage, especially in crypto. The strategy gets a little more complex. It's an options play, designed to bet on the stock going up over the next year and a half. The beauty of it is that it's designed to capture that potential upside from the new leadership, while also putting a hard cap on how much you could lose if you're wrong. Okay, our second trade idea zeroes in on that pie-growing concept we talked about. The thesis is that Virtu's global 24/7 machine gives it an advantage that almost nobody else has. So the strategy is what's called a pairs trade. This is cool. It's not just a bet on Virtu going up, it's a bet on Virtu doing better than its competitors. So you'd go long Vert stock, and at the same time you'd short a bunch of their smaller, more regional rivals. What this does is it isolates Virtu's unique strengths and gives you a chance to profit even if the whole sector takes a hit. So when you tie this all together, where do we land? For us, the rating on Virtu Financial is a clear outperform. I mean, you've got a tech visionary taking over, you have these incredibly powerful and very real growth drivers, and a track record of just flat-out execution. We've got a lot of confidence that they're set to beat the market going forward. So let's wrap this up. What we saw was a truly record-setting quarter, but the real story was the leadership change, a strategic move that puts technology front and center. The big things to watch are those growth engines and digital assets and their push into a truly global 24/7 market. It really feels like the path is set for the next era at Virtu. And as always, remember, this is not financial advice.